Good morning. Welcome back to Squawk. Well, better fortunes for protective wear maker Ansell. Earlier this week, the company posted a 5% increase in net profit for the year to June. That's on revenue of 1.3 billion Australian dollars, or about 1.2 billion US dollars. If you do a quick conversion, the numbers come after a 15% decline in first half profit, due partly to weakness in Europe and also because of foreign exchange factors. The company said that these will be the last results that it reports in Aussie dollars, as it is increasingly becoming an international business, and that means more than half of its institutional shareholder base is now in the United States. There's a snapshot of the stock, last closed at $19.21. Joining us now is Magnus Nicolin. Magnus is the CEO of Ansell, and he's joining us today for an exclusive interview here on CNBC. Thank you so much for joining us, Magnus. We really appreciate it. Tell us what you're seeing out there.
Thank you. Good morning. It's great to be with you. It's been a good week here in Sydney and Melbourne.
Tell us what you're seeing out there in the business front, Magnus. We're tracking the global economy so quickly, and you guys operate in so many markets. We want to hear it directly from you.
Yeah. Well, it's been obviously a very interesting year. Lots of ups and downs, and I was noticing your previous segment on the movement in a lot of the different currencies, including the Indian rupee. And obviously we have most of our manufacturing in Southeast Asia and a lot of sales in 50, 60 countries around the world. So this is very topical for us, and obviously we always need to do a very good job of managing the cost and the revenue currencies, and that's been a big part of the story in the last year.
Yeah, absolutely, and I know that acquisition has been a main part of your drive to grow revenue, and you've been expanding quite aggressively in emerging markets over the past year or so. Yeah. How does this shift from EM, the big sucking sound Marty always calls it, of money coming out of emerging markets going back into developed markets, how does that affect a company like yours?
Well, obviously it makes it a little bit more difficult to manage, but it's also a tremendous opportunity. When you think about what we do, protective gloves for a variety of industrial verticals and industrial segments, obviously a lot of the jobs are in emerging markets, so we need to be there, and over the last several years we've invested aggressively to build up our presence in places like China and India and Brazil, Russia, Middle East and so forth. And when it comes to the medical space, where we have leading market share positions in surgical gloves, the same story applies. You have the emerging middle classes in these areas, and on top of that you have medical tourism, and that's growing rapidly in places like Dubai. So obviously we have another reason to invest in these markets, and we've been doing that, and it's been working very well.
So as things slow down, you're going to keep going forward and looking for acquisitions in this area. Your strategy is not going to change at all.
Well, you always evolve your strategy a little bit, but we have a strategy that we're very comfortable with, and we've achieved some really strong results. We acquired 4 companies last year, and we've integrated them to great effect, capturing a lot of the synergies that we intended to go for. And we've now also expanded into clothing, industrial clothing, if you will, high-end chemical protection and fire-resistant clothing and those kinds of things. So wherever there's an industry where you have a lot of dangerous jobs to be done, then we're there to provide the protection.
And tell us how your industry, protective clothing, condoms, etc., do during economic downturns.
Well, obviously we are affected by downturns as most everybody else, but we have a portfolio that is quite balanced. So the medical business tends to be fairly stable. The industrial goes up and down, but since we're involved in so many different industrial verticals, automotive industry on one end of the extreme, first responders, firefighters on the other, and then they tend to evolve in different ways, giving us a certain amount of stability. And then when you overlay on that a very broad global exposure, when Europe is down, Asia is up, and so forth, it gives us a lot of room to maneuver and a strong ability to deliver consistent results.
Okay, diversification important for any portfolio. Thank you so much, Magnus, for joining us. We appreciate it. Magnus Nicolin there, the CEO of Ansell.